Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski. The lack of clarity from Washington has created global uncertainty around Trump's tariff policy, which has provided some support to the US dollar. However, it is important to remember that starting today, a new 10% tariff on all countries officially comes into effect. There are no major Eurozone data releases scheduled for the first half of the day, so pressure on the euro may persist. We expect the first signs of buy activity near the support level at 1.1767. You could plan to act there only after a false breakout forms, which would provide an entry point targeting a move toward the resistance at 1.1788, established at yesterday's close. A breakout about 1788 followed by a successful retest would confirm bullish momentum and open the way toward 1.1810, restoring a more positive outlook for the pair. The ultimate upside target stands at 1.1834, where you could plan to take profit. If EURUSD declines and no buying interest appears around 1767, downside pressure could increase significantly. Sellers would likely push the pair toward the more attractive support at 1.1745. Only a false breakout there would justify considering long positions. Alternatively, I would look to open long positions immediately on the rebound from 1.1719, targeting an intraday upward correction of 30-35 pips. Sellers regained most of the lost ground yesterday and now aiming to keep the market under control, which could increase pressure on the pair in the second half of the day. In case of a minor correction, we expect the first signs of bearish activity near resistance at 1.1788. Only a false breakout there would provide a valid selling opportunity, targeting a decline toward the support level at 1.1767. A break in consolidation below this level, followed by a retest from below, would create another strong signal to open short positions with a move toward 1.1745. reinforcing the bearish structure of the market. The ultimate downside target stands at 1.1719, where you could plan to take profit. If EURUSD moves higher in the first half of the day, and bears failed to act around 1788, where the moving averages are currently aligned in favor of the sellers, it would be better to postpone short positions until the next resistance, 1.1810. Selling there would only be considered after a failed breakout. Alternatively, you could plan to open short positions immediately on the rebound from 1834, targeting a 30-35 pip downward correction. And we're starting with pound sterling dollar pair with Dinler. On the hourly chart, the GBPUSD pair on Monday rose to resistance level of 1.3526, 35.39, rebounded from it, and then declined to 1.3437, 34.70 level. At the moment, the pound is trading between these two zones, hinting at sideways movement. A consolidation below 34.37, 34.70 would increase the likelihood of further decline toward the next support level at 1.3352, 33.62. A consolidation above the 1.3526, 35.39 which suggests the end of the bearish trend. The wave situation remains bearish. The last completed upward wave failed to break the previous peg, while the last downward wave broke the previous low. To reverse the trend back to the bullish, the pair needs to consolidate above the latest peg at 1.30730 or form two consecutive bullish waves. The news background for the pound has been weak in recent months, but the US news backdrop has also rarely pleased traders. Recently, the pound has been on a losing streak, yet Donald Trump regularly supports the bulls. On the 4-hour chart, the pair declined to the support level of 1.33693435, rebounded from it, and reversed in favor of the pound. A growth process has begun but remains within the descending trend channel. Therefore, strong growth can only be expected after a breakout above the channel. In that case, bullish traders will once again target the Fibonacci level of 127 at 1.3795. No emergent divergences observed on any indicators today. That's all for today. See you online soon.